Welcome back to the deep dive. We had a huge task this week, and it was to take, well, almost 4 hours of some pretty intense analysis and boil it all down.
Yeah, TLDR for a nearly 4-hour live stream
Ah,
it's a mission.
it really is. And the goal here was to connect events that, on the surface, seem to have nothing to do with each other.
Absolutely. So our source material for this is from Simon Dixon. He's a Bitcoin OG, an investor, a geopolitical and financial analyst.
Right.
And we're specifically pulling from his Bitcoin Hard Talk, episode 106. It was live streamed just a few days ago on November 14th, 2025. And it is dense.
Dense, and let's be honest, pretty controversial. It suggests a level of coordination behind the scenes that's, well, it's terrifying if it's true.
It is.
And that's why we're here. We're going to give you the absolute core of that 223-minute deep dive. The central thesis, the big question Dixon asks is this: what connects something like a 50-year mortgage, a product designed for lifetime debt, to, say, the AI stock bubble?
And then all the way to a former leader of Qaeda showing up at the White House for a meeting.
Exactly. How are those three things possibly linked?
Well, his central claim is that they are not random. They're not separate events. He argues they're all coordinated moves by this single power structure that he calls the proof of weapons network.
Okay, proof of weapons network. We need to unpack that. This isn't just a government or a political party, according to the source.
No, not at all. It's an alliance, a powerful interlocking one built on three main pillars.
Which are?
You've got the military-industrial complex, or the MIC, then the financial-industrial complex, the FIC, and finally, big tech.
So defense giants, Wall Street, and the tech companies that build the infrastructure, like Palantir or NVIDIA.
Exactly. And their mission, their one single goal, according to this analysis,
Profit.
maximum profits. And
Right.
they get it in two ways. First, by creating what he calls debt slavery at home, getting the population into lifetime financial submission,
In the second way.
manufacturing chaos abroad, and then right after that, manufacturing stability so they can profit from the rebuild. They make money on the war, and they make money on the peace that follows.
That is a deeply cynical view of the world. But you can see how it might explain some of the bizarre contradictions we see in policy.
It's a framework that connects the dots.
Okay, let's dive into the first part of this analysis then. Section 1. This week in macro, we're talking about the debt-fueled market and this 50-year mortgage bait.
Right. So to get what's happening in the markets now, the source says you have to go back to a specific trigger event, a big spike in long-term interest rates.
And this happened around a date he calls Liberation Day.
Liberation Day, April 2nd, 2025. It happened right after a major political announcement about, well, a reset of the world order, explicitly designed to benefit firms like BlackRock and the whole financial complex.
And the market reaction.
Immediate corrections. The dollar, asset markets, they crashed. Because the whole system, the whole Ponzi scheme of long-term debt was suddenly at risk from these higher rates.
So if the debt structure itself is threatened, the powers that be have to react. What was the predictable response?
Panic. And then a very, very aggressive policy reversal. They immediately started pumping liquidity back in, they eased up on quantitative tightening QT, and they started pushing this narrative that rates must come down.
Paving the way for more QE.
More QE, quantitative easing. Dixon is certain it's imminent. He says the money printer is about to turn back on, full blast, no matter what the inflation risks are.
But why are they so desperate? This isn't just about saving some investor portfolios, is it? It goes back to this idea of fiscal dominance. Let's spend a minute on that.
We have to. Fiscal dominance is the key. It basically means the government's need to roll over its own gigantic, unsustainable debt now controls monetary policy.
So forget about fighting inflation. The number one job is to service the debt.
Exactly. The debt is so huge that the Federal Reserve, and you have to remember its shareholders are the big banks, the Fed is forced to prioritize making that debt cheap.
Which means keeping short-term interest rates artificially low.
Correct. It's a political choice. You screw the real economy, you let inflation eat away at the average person's savings, but you absolutely must keep the stock market up and keep that debt machine running.
And that right there is the engine of the K-shaped economy we always hear about.
It's the direct result. When your policy is just pumping liquidity to monetize debt, you get massive asset inflation. The people who own assets, the top 10%, they get richer.
While everyone else who relies on a wage sees their money become worth less and less.
Right. It's a feedback loop. The rich get richer, the poor get pushed deeper into debt. It's servitude by design.
So let's use that lens to look at the AI bubble. The valuations we're seeing, especially for a company like NVIDIA, are just insane. The source claims this isn't your typical speculative mania.
No, he argues it's much more strategic than that.
Yeah.
He calls the AI bubble a deliberately engineered pump-and-dump cycle.
Orchestrated by this proof of weapons network.
Yes, through their hedge funds and investment arms. And the goal is two things. Make a quick buck, sure, but more importantly, long-term consolidation and control.
Consolidation of what, specifically?
Of assets that are strategically critical to the network's power. Think about what NVIDIA actually does. It's not just selling chips.
It's building the foundation for everything. AI, military tech, surveillance.
It's providing the hardware for the global infrastructure, what Dixon calls the geopolitical rails. So the network needs these companies, and they cannot let their share prices collapse, ever.
Regardless of market fundamentals.
Fundamentals don't matter. And that's where fiscal dominance comes back in. How do you protect a stock price in a system drowning in debt? You print money, you monetize the debt, QE.
Because the Fed's shareholders, the banks, control the political lobby that guarantees the money printer will always be there for them.
The whole thing, from this perspective, is a fraudulent, centralized machine. It works only for the network.
And that context sets up the next move perfectly. The truly shocking proposal for a 50-year mortgage. Marketed as relief, but the source frames it as something much darker.
He calls it a pure bank bailout, designed for maximum debt slavery. That's the perfect carrot and stick.
The carrot being?
Lower monthly payments. Looks great on paper to a family that's struggling. But the real reason, the stick, is that it's a desperate bailout for the banks, sold to the public by political figures like Trump.
What's the crisis it's trying to solve? Why do the banks need this bailout right now?
It's a massive liquidity problem. The banks are sitting on, it's estimated, $1 to $2 trillion of old mortgages.
From back when rates were at rock bottom.
Exactly. Loans from a few years ago at 2 or 3%. In today's world, with new mortgages at 6 or 7%, those old loans are basically toxic assets on their books.
So that 2% mortgage is now only worth maybe 50, 60 cents on the dollar. That's a huge hole in their balance sheet.
It's an existential threat.
Right.
And the 50-year mortgage is a magic wand. They convince homeowners to refinance, to roll over that old 2% loan into a new 50-year loan at, say, 6.5%.
And instantly that trillion-dollar hole on their books
becomes hundreds of billions of dollars in pure instant profit, an enormous banker's bonus that required zero productive work. Then they package it all up, sell it to BlackRock and PIMCO, and the risk is spread across the whole system.
Well, they keep the profit.
Yeah.
And the cost to the actual homeowner. I mean, the math and the source material is just devastating.
This is where you see the slavery part. Let's use his example of a $400,000 house.
Okay.
With a standard 30-year mortgage, you'd pay about $558,000 in interest over the life of the loan. Your total cost is just under $1 million. It's a lot, but it ends.
But stretching that out to 50 years, 2 full generations.
The interest you pay basically doubles. You pay a staggering $1.16 million in pure interest.
$1.16 million. It's just an interest. So that $400,000 house now costs you $1.6 million. This product is designed, literally, to lock your children and maybe even your grandchildren into debt. It is lifetime submission to Wall Street.
It's hard to even wrap your head around that. So they offer the carrot, the lower monthly payment, and they're betting people will either just pay the extra $1 million in interest.
Or, for the savvier person, they bet you'll take the savings and invest it right back into their system.
Right, into the S&P 500 ETFs, the Bitcoin ETFs, products they control.
That's the trick. They don't mind if you invest the difference as long as the capital stays inside their walled garden. It maintains their control.
Which leads us to what the source calls the hack, the real boycott, the financial escape route.
And this example really shows the power of taking back your sovereignty. So he uses a $500,000 home at a 6% interest rate.
Okay.
The difference in the monthly payment between a 30-year and a 50-year loan is about $365 a month.
So the bank gets an extra $500,000 in interest over the long run. But the hacker, the individual, takes that $365 every single month and puts it into the one asset the network truly fears.
Self-custody Bitcoin.
For self-custody Bitcoin.
Yeah.
And we have to be extremely clear here.
Absolutely. This is not financial advice.
Not financial advice. Past performance is no guarantee of future results. But just for illustration, using his assumption of a 20% compound annual growth rate.
If you invested that $365 a month.
After 30 years, the normal length of a mortgage, that stack could hypothetically be worth $8.4 million.
Wow.
And if you kept doing it for the full 50 years of the mortgage term, it could theoretically grow to something like $445 million. The difference is astronomical.
So the real takeaway is about control. The system wants your interest payments, but if you're smart, they want your investment money in their products.
Yes. They're building what he calls a Bitcoin industrial complex.
Wow.
Push you into ETFs, into 401ks, so they have custody. If they have custody, they can borrow against it. They can use it as collateral for their own games.
So the only real act of nonviolent resistance is self-custody.
It's the only way. And that sets up a perfect link, doesn't it?
Yeah.
The 50-year mortgage gets your financial compliance for life, which prepares you for the next step. Digital surveillance money.
Total financial control.
The debt instrument at home connects perfectly to the global surveillance currency.
Let's move to that now. Section 2, this week in Bitcoin centralization, surveillance, and resistance.
Okay, so now we shift over to Europe. The source notes that Europe's going through its biggest monetary change since, 1999? Right before the dot-com bust.
And the official reason for this big overhaul, the digital euro, is to fight money laundering, something like $700 billion a year.
Right. But Dixon's argument is that money laundering on that scale isn't an accident. It's often protected, even facilitated, by the very banks and agencies that profit from it. So the official story is a smokescreen.
The real goal is
Control. Total financial control and surveillance.
And he draws a really interesting comparison between the Chinese surveillance model and the one being built in Europe.
It's a key distinction. In China, the system is pretty open about what it is. People know it's a state-run banking system. Surveillance is a given. It's oppressive, sure, but the money theoretically flows back to the state.
But the European model is more insidious.
Exactly. The surveillance is designed to be covert, but the control is just as total. And crucially, the profits and all that data flow upwards to the private banks and the proof of weapons network in the U.S.
So Europe essentially becomes an economic vassal state. The money is used to pump U.S. stocks.
Yes, it strengthens the U.S.-based financial industrial complex. And this system lets the network privately profit from all that surveillance data. Let's talk about the actual control mechanisms they have planned.
This is the scary part.
It is. They're talking about things like tax upon payment. Now, imagine you buy something and the tax is instantly taken and you're treated as guilty until proven innocent. You have to apply to get it back.
It just flips the whole system on its head.
And it's not passive control, it's active. They can integrate negative or positive interest rates right into your money.
Based on what?
On your social credit score, your spending habits, your energy use. The system can literally punish you for saving or reward you for spending your money at companies the network wants to pump.
It's the monetary engine for that you will own nothing and be happy world.
When your money itself can enforce political compliance, you've reached total submission. You don't need a cop on every corner. The currency is the cop.
So while Europe builds that, the U.S. is taking a different approach to Bitcoin. It's claiming to be the crypto capital of the world, but it's really a strategy of centralization.
The marketing is all about innovation, right? Stable coins, tokenizing assets, and especially pushing Bitcoin ETFs into 401ks. That's the velvet glove.
But there's an iron fist. The U.S. is building a big Bitcoin strategic reserve, something like 325,000 BTC. How are they getting it?
This is the crucial part. They're not buying it on the open market. They're building the reserve almost entirely through seizure and forfeiture.
Confiscating it.
Confiscating. And the source notes that China has been very vocal, calling this straight-up state-level theft.
So the public story is, we're embracing crypto. But the reality is, they're taking this asset to use as collateral.
That's the conclusion. The government, which is captured by the banks, is going to use this confiscated Bitcoin, a pristine, scarce asset, to bail out the failing debt system in the next crisis.
Socialize the losses, privatize the gains.
It's the same story. They use inflation to steal from the public, while the banks get access to clean collateral. It's a guaranteed outcome under fiscal dominance.
And the ETF strategy. Wall Street is famous for using ETFs to gain control. BlackRock did it in 2008. Are they doing the same thing to Bitcoin?
The exact same playbook. The whole point of pushing Bitcoin into ETFs is to centralize custody and gain power. When you hold the Bitcoin for millions of people, you have immense leverage.
You can borrow against that giant stash.
You can treat it as a financial weapon of mass destruction. It allows them to get huge loans, like the ones JP Morgan is reportedly getting, using other people's Bitcoin as collateral to pay off their own debts.
It makes Bitcoin serve the very system it was designed to escape.
They can't destroy Bitcoin. Its math is too elegant, so they have to co-opt it. They need its liquidity, its strategic value for this great monetary transition.
So once again, the resistance strategy for you, the listener, is deceptively simple.
It has to be said over and over. Financial sovereignty is everything. Ignore the price, buy a little bit every month, and the most important part, self-custody.
Keep it off their exchanges, out of their ETFs.
Deny them the ability to use your asset as collateral against you.
Okay. We've laid out the mechanics of debt slavery at home, digital surveillance, all run by this proof of weapons network. Now we get to the most shocking part of the analysis.
How this same network pivots global conflict for profit.
Which brings us to Section 3, from 9/11 to the White House.
This is where the military-industrial complex and the financial-industrial complex really show their hand.
So the source claims the entire game in the Middle East has changed. The old era of U.S. and Israeli-led destabilization is over.
The big catalyst for this was China. When China successfully brokered peace between Iran and Saudi Arabia, two ancient rivals, it was a seismic shift.
It changed the balance of power.
Instantly, power shifted to the Gulf Cooperation Council, the GCC, and that fundamentally threatened the entire petrodollar system.
So why does that force a change in the proof of weapons network's profit model?
Because the two arms of the network need different things. The military-industrial complex, the Lockheeds, the Boeings, they thrive on chaos. They need forever wars to sell weapons and get those massive defense contracts.
But the financial industrial complex, the BlackRocks, the JP Morgans, the sovereign wealth funds, they need the opposite.
They need stability. If you want to invest trillions of dollars rebuilding Syria or Iraq, you can't have rockets flying around. Political risk kills those deals. Insurance is too high.
So the profit model is pivoting from the business of war to the business of reconstruction.
From MIC profits to FIC profits.
And where does Israel fit into this new world order?
According to the source, Israel's role as the key destabilizing force for the U.S. in the region is no longer needed. It's becoming what Dixon calls a covert colony. It's being slowly defunded as the U.S. military budget shifts priorities.
Which would explain the almost panicked reaction from certain media and political groups.
Exactly. The source points to the explosion in propaganda. He mentions figures like $7,000 per social media post as proof that the old MIC faction is losing power. Their business model is becoming obsolete, so they're fighting a narrative war.
A concrete example of this was the recent U.S.-Saudi investment summit in Washington.
Dixon calls this reverse colonization. Essentially, the U.S. government, acting as an agent for the FIC, is selling off key U.S. assets, AI, defense tech, to the Saudi Sovereign Wealth Fund.
And the money for this reverse colonization, where's it coming from?
It's coming from China. The money flows have completely reversed. China buys oil from Saudi Arabia and Iran with yuan. The GCC then uses that yuan to buy up critical U.S. infrastructure. It's a fundamental reset of the petrodollar system.
Wow. Okay, that context sets the stage for the most unbelievable event in the whole analysis. The legitimization of a man who was, until recently, a designated terrorist.
Yeah, the meeting between Abu Muhammad al-Jawlani, the former head of Al-Qaeda and ISIS in Syria, and Donald Trump at the White House.
Followed by an interview on Fox News. I mean, to have the leader of a group tied to 9/11 in the White House, how is that even possible?
The source argues it was a cold, hard business decision by the financial industrial complex. They need to rebuild Syria, and there are trillions on the table. Think Jared Kushner's Affinity Partners Fund.
And to do that, they need a stable figurehead on the ground.
They need someone to guarantee their investments will be safe, and Jawlani controls the right territory. He provides the stability they can monetize. The deals have to be locked in before the official sanctions get lifted.
So the photo op with the president provides instant legitimacy for the financial world to move in.
It gives them the political cover they need.
Let's talk about that Fox News interview. The source called it a humiliation ritual.
It was pure theater, and it suggests there's still a power struggle going on. The interviewer, who was probably aligned with the old losing MIC faction, just hammered him.
On his past, right? The 9/11 links, his ties to Russia and Assad.
Relentlessly. And you see Jawlani just trying to pivot, awkwardly talking about investment opportunities in Syria. The whole point was to weaken his negotiating position, to humiliate him on the world stage.
A message from the old guard that they're not happy with this new direction.
A sign that even though the FIC is winning, they still have to deal with the angry remnants of the MIC lobby who are watching their forever war profits dry up.
This whole sequence, from war to profit, brings us to the core claim of the source material, the most controversial one.
That the entire foundation of the proof of weapons network, the entire war on terror, was a lie.
A lie in what sense?
The source claims that groups like Al-Qaeda and ISIS were never a spontaneous threat. They were rented militias, paid mercenaries, created, funded, and armed by a nexus of U.S., Saudi, and Israeli intelligence services.
That's an incredible claim. What is that based on?
It's based on looking at the money flows, the historical reports of covert funding. The argument is that these groups were leased, essentially, to create the constant external threat needed to justify funneling trillions of dollars to defense contractors.
Which connects directly to what General Wesley Clark said he saw at the Pentagon right after 9/11.
Right. The source argues 9/11 was just the pretext, the new Pearl Harbor they needed to launch a war that was already planned. General Clark saw a memo laying out the plan: take out 7 countries in 5 years.
And those countries were?
Iraq, Syria, Lebanon, Libya, Somalia, Sudan, and the final prize, Iran. He argues the last 25 years of conflict was just the execution of that pre-written script.
A script for profit, a profitable, bloody theater. So how did they fund this outside of official budgets?
Through illicit off-balance sheet money. The source claims it was routed through places like Israel, laundered through defense contracts with Lockheed, Boeing, and tech firms like Palantir, and financed by organized crime, drug trafficking, human trafficking.
It's a complete blurring of the lines between intelligence, crime, and corporate profit.
It's a network that operates above the law, using violence as an investment strategy.
And the word terrorist itself just becomes a tool.
It's just a label. It has no fixed meaning. It's used to justify whatever they need to do, whether it's invading a country or passing the Patriot Act. Jelani going from terrorist to White House guest proves the label is purely transactional.
And the most chilling part of all this is the final turn of the screw.
The tactics they perfected overseas, creating division, stoking fear, using surveillance, are now being brought home.
Turned inward against their own populations.
As the foreign enemies become less profitable, the network needs new internal enemies. They use the same surveillance tools, the same data, to justify a domestic security state.
Right.
We, the citizens of the West, become the new captive profit center.
Okay, that's a lot. We've gone from mortgages to digital currencies to global war. Let's try to bring all 3 of these threads together for the listener.
Let's do it.
So if we look at everything through this lens that Simon Dixon provides, this proof of weapons network, the chaos starts to make a strange kind of sense.
The events stop looking random. The 50-year mortgage is how they enslave you with debt at home. It funnels guaranteed interest payments to Wall Street for generations.
The AI bubble isn't just a bubble. It's market manipulation to make sure they control the critical infrastructure of the future.
And the meeting with the former al-Qaeda leader is just the business pivot. They're moving from the profits of manufactured war to the profits of manufactured reconstruction. It all serves the same financial complex.
So if the political system is captured, what can you, the listener, actually do? What's the real form of resistance here?
The source is very clear on this. The only way to fight back is to achieve financial sovereignty. Your real vote isn't at the ballot box. It's with your money.
You have to boycott their system.
Boycott their products, the debt traps, the centralized ETFs, the coming surveillance money. You have to opt out.
And the peaceful way to do that?
It's the consistent, patient accumulation, and most importantly, the ownership of Bitcoin in self-custody. That is the peaceful resistance. It operates completely outside their control. It's the only verifiable escape hatch.
And we absolutely must repeat the disclaimer about the investment scenario we discussed. The 20% growth rate was a hypothetical from the source, used for illustration.
Yes, it is not financial advice. Past performance is not a guarantee of future returns. Please do your own research.
The lesson is about the principle of control, not the specific number.
Exactly. Taking back control of your financial destiny.
And this whole analysis leaves us with one final, very provocative thought. It circles all the way back to General Wesley Clark's 7-country list.
6 of them have been torn apart. Iraq, Syria, Lebanon, Libya, Somalia, Sudan.
Which leaves one major target from that original script still standing: Iran.
And so you have to ask the critical question. Given this huge pivot from the MIC's chaos model to the FIC's stability model, is that constant drumbeat for war with Iran the final, unfinished business of that 25-year-old script?
Or has the calculus changed? Will the new financial masters, the FIC, who need stability for their rebuilding projects, ultimately overrule the war machine and force a peace with Iran too, simply because war is now bad for business?
When the system tells you something is a threat, the source asks us to really think about it. Is it to protect you, or is it to profit from you?
That is the question to keep in mind, a profound thought to end this deep dive on. Thank you for walking us through this.